Broadcasting from the business capital of the world, this is the Podcast Business News Network.
Hi, welcome back, everybody. I've said this before, but I'm going to say it again. The most important part of your business, any business, isn't just the services, isn't just the products. It's your financial foundation, how you track that, what you're doing with that. If you don't have that in order, all the other stuff you're doing is almost a waste of time because you could be making money and it's flying out the door and you don't even know it. There are so many reports available that can give you insight on that. And we're gonna dive a little deeper into that. She is somebody that helps companies, all different types, especially even more industrial companies as well, warehousing, logistics, with their bookkeeping, their finances. She's the owner and founder of Equilibrium Consultants. And we're going into the report. Kat Scardaville is back with us. How you doing today?
Good. How you doing?
Good, good, good.
Awesome.
Yeah, I'm aware of the P&L, the profit and loss report statement, and some other ones, but I think like most business owners, we just skim the surface. We don't really know what's going on underneath the hood. So I'm glad we're talking about this today to kind of give it some insight.
Yeah. Oh my gosh, for sure. So the business owner is interested in, am I making money or not? I don't care about anything else. Am I making money or not? And I have to
Yep.
say, well, yeah, but there's a little bit more involved than that. So the short answer is yes, but do you want to know why? And do you want to know how? And do you want to know where the main drivers are coming from? Do you want to work smarter or you want to work harder? You know what I mean? We have to see what the trends are. We got to see all this data. And unless I'm sorry to say this, but you're going to have to carve out maybe like a good half hour, maybe even an hour to really dissect this and figure out what you want to do with this information. Because
Hmm.
the decision is ultimately yours. You know what I mean?
And,
So
and it's important. That's where I think a lot of business owners miss the mark, or they leave it to their bookkeeper, and that's fine to some degree, but it's not their business, it's your business. So you really want to have a better grip on what's going on because
sure.
it's everything. So where do we start? What report? How do you want to begin?
Yeah. Okay. So the bookkeeper is often a very overlooked and underappreciated job,
For sure.
mainly because oh, but it's so easy. I mean, you're just doing data entry and blah blah blah. When in reality, that's that's not the most accurate statement in any degree. So the bookkeeper focuses on the past, right? The transactions that took place as of today, an hour ago, and yesterday, and beyond. Um, the reason why they're so important, especially like a good bookkeeper, is to make sure that all the transactions are properly allocated. So if they know that if you bought a car and the car was like 17 grand, if they know how to properly document it, I already know how to not only depreciate it, write it off, what's the interest, all that stuff. The bookkeeper's good. My job is good. My job is like 1,000 times easier. So the foundation at first value has to be as solid as humanly possible. So if I
Hmm.
don't have that key person knowing what the job is, knowing what the gig entails, I'm
Yeah.
already I'm starting on the wrong foot.
Well,
You know.
I wasn't going to say that because I knew eventually we would get to it, but
Yeah.
all of this is only as good as the starting point, and that's where the data is entered.
Yep.
And I think that's one of the, again, I'm not the expert, but critical and one of the hardest parts where it has to be accurate. It has to be placed in a certain spot. Accurate again,
Yeah,
that's,
absolutely.
you're only good as your information at
Right.
that point.
No, for sure.
Hmm.
And then so once the transactions are solid, now we can finally do the modeling, we can finally focus on the reports. So one of the first reports that we like to look at is the statement of cash flows, for example, right? And the interesting thing about the statement of cash flows is that it tells you what comes in, what goes out, and what in particular is the activity day by day, but it does it through um, what your investing activities are, what your financing activities are, and also what your day-to-day operations are, which is your operating activities. So, for example, it'll tell you what the net income is for the operating activities. It'll tell you, for example, your accounts receivable, what your clients owe you, right? Because that's still a major asset.
Hmm.
And then if there's like, I don't know, other asset adjustments like sales tax, or you're paying things with a credit card. These are operating things,
Oh,
what you
but
need
by the
to
way,
do
I'm
with.
just going to interject in here because you're at that point. Um, Tax, not sales tax, but tax.
Yeah,
This is the 16th of September, and your quarterly taxes are due.
yeah, for sure. Yeah.
I'm well aware. I have to write that insert word check before they pick up the mail today.
Yo, for sure. Yes, yes,
And I,
yes.
I do it a check. I could do it online, blah, 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 but like a paper record. But yeah, so yeah, and then sales tax. Yeah, that's another part that
Mhm.
we don't consider.
Yeah,
Hmm.
exactly. That's and you can with the sales taxes, you can pay them on a monthly basis if you make over X amount of dollars, because it's different with each state. And where we are in New Jersey, it's critical that you get it correct. Otherwise, they'll penalize you for like a penny. If you are a
Hmm.
penny off, they'll be like, okay, penalties, interest, blah blah blah. Now you're paying like stupid amounts of money. So so there's that, right? So now you have like your liabilities that you got to worry about, and then you have your credit cards to worry about, but whatever, we already discussed that. And so now after these day-to-day interactions, right, the in and outs of Monday through Friday, or whatever, 7 days a week, however amount of hours your business is open, this will tell you um, what the cash flow is going to be, right, from the day-to-day operations. So for example, if you have net income of like $93,000 in 1 month, right, and your AR is crazy high, like 116, but then you have a tax liability of, I don't know, let's say $1,500, and then you have credit cards of like 23,000. Your cash at the end of the day is something like 2 grand. That's no bueno.
Hmm.
We got to work on that. So, and that's just the in and outs. That's not even the investing activities. What if the owner decides to invest into the company because it recognizes that the cash flow is low? You know what I mean? So that's a big outflow of the
Wow.
cash. Yeah, that's we got to work on that too, stuff like that. And then you have your financing activities, which is different from your investing activities, right? The investing activities has to do with owner's equity, and has to do with other things involving the owner. Maybe the owner wants to, um, I don't know, like I'm going to put money into the business involving, I want to grab a bigger machine. I want to buy a bigger machine. I want to put things into the company that are going to make it run more efficiently, but it's a huge to do, you know. That's investing activity. And then for financing activity, let's say for the sake of argument, you're you're a partner who invested a lot of money into the business. That would help with the cash flow. Does that help the owner?
Hmm.
Not so much. So, and then the partner distributions, because if as a business owner you do have that right where you can draw your salary from the money, excuse me, from the company, my mistake. And then, well, sometimes maybe you take too much, and this is where we identify what is the appropriate amount based
Hmm.
on the AR, based on your expenses, based on all these adjustments that you're considering, your sales tax, your fixed expenses, your, whatever. Excuse me. So the financing activities could equate to just a credit card, but all in all, the cash flow at the end of the day, like these are some serious challenges that I'm describing, right? But it does have a positive cash flow increase, right? Just because we've invested into the business in this scenario, and we've put in so much into this startup, for example. But the drag is that even though we've had a positive cash flow increase, it's been like $13,000 at the end of the day. That's $13,000 of the owner's money. The business didn't make that money. The owner contributed to that money.
So let's talk about that for a moment. Let's say you realize that you need to grow the business and you want to offer another service, but in order to provide that service, you have to make an investment into, let's say, equipment. Very hypothetical. The investment, can that come from the operating account? Is that work as one scenario? And that operating account could also be where, the owner pulls a draw, and that's their salary.
Mhm.
Are those possible, those scenarios possible? And the money that was invested into the company
Yep.
for this new service, new equipment, what is the tax implication on that? Can you write some of that off, whether it was successful or not? How does that aspect work?
Yeah, you can. You definitely can, because the point is that we can prove that we purchased it for the company.
Sure,
First of all, we can
sure.
prove that we did that. We can depreciate the piece of equipment over, um, depending on how big it is. It starts at 5 years, you know,
Okay.
and you can depreciate that amount over a certain amount of time. If this were real estate, like if you own your house, for example, that's about 20, depending on the scenario, right?
Right.
Every scenario is different.
Yep.
Right.
Yep.
So, but all in all, um, the
So
tax.
let's go numbers here. Just because I'm sure a lot of companies are thinking, or small business owners thinking, you know what, we really need to step up our game. We have to make an investment. We have to, let's say, it's a $20,000 investment in equipment.
Okay.
Like that goal, just pick any number. It could be 100, whatever you want to work with.
Sure.
Um, what can be deducted in terms of taxes for the investment in new equipment?
Okay. So the tax deduction is, first you got to consider the depreciation. And the depreciation is usually a straight line depreciation of 5 years. So there's that. And then that will accumulate and pass over, or carry over, excuse me, to the remaining 5 years. So if we do it today for 2024, next year, it will carry over until it's over and done with. So there's that, which is pretty great. And then you have the processes that are done through that piece of equipment. And the process starts when all the combinations come together, right? And that's direct labor, direct materials, um, indirect labor, indirect materials, right? So the difference is, if I'm doing the work on the machine, I'm actually getting my hands dirty. I'm turning the wrench, that kind of thing.
Sure.
Indirect labor would be like overhead, or how much insurance do I cost the company? How much insurance, how much do I contribute in keeping the lights on? How much do I contribute in keeping the, I don't know, the gas on, the uniforms intact? All of that stuff.
Hmm.
Not only what do I cost the company, but what contribution do I make towards the company, right? So there's a lot of factors involved in this, for sure, right? So, and by the way, that's just the statement of cash flows. That is only the one report that we just did, and we already got all this data through it. We didn't even touch the P&L. We didn't even touch the balance sheet, right? Because this is all the business owners care about. Am I making money? Right? Am I making money or
Sure.
not? You know.
Let,
So
let, well, let's go there.
yeah,
P&L, profit and loss.
yeah,
And then you mentioned balance sheet,
yeah.
profit and loss. I mean, we surely can explain it and some of the values in that report. Balance sheet. What language did you switch over to just now? Because I don't know what that means. Like,
I promise it's all English. I promise.
okay. Um, what balance sheet? What is that?
Okay, so
I'm financially illiterate here. I'm telling you.
it's cool, man. It's
I admit
cool.
it.
So so the balance sheet is the health of the business in real time. And again, this goes back to the financial foundation, like the key individuals who input the data, right?
Yeah.
So we have to give props to the bookkeeper. We have to give props to the advisory, and like what I'm doing is advisory stuff, CFO stuff, right? Um, and advisors like myself, and CFO individuals like myself, obviously bookkeepers like myself. Um, we partner with the small business owner and sharing this information and sharing this data with them so they can make educated and informed decisions, right? So in this case, the balance sheet is the health of the business right this red hot second, you know? So
Okay.
it shares your assets, which is what you own, your liabilities, which is what you owe, and your equity, which is your net worth, like what you're worth. You know what I mean?
Hmm.
Legitimately what you're worth,
Got it.
right? So your assets, they're your bank accounts, your accounts receivable, your other current assets. That could include like the loans to your partners. That could include your, oh gosh, like, your undeposited funds, like stocks, bonds. That could be like lots of different things. It's like a combination of like cash, combination of receivables, combination of a bunch of different things. Regardless, it's all positive for the business. It's what the business earns and that belongs to it. And then you have the liabilities, which is what the business owes. So that's your vendors, your accounts payable, your credit cards, your debt. Like your taxes that you owe, your other long-term liabilities. Maybe you bought a car and you're financing the car, or you're financing the piece of equipment, or you're financing something else that's pertinent to your business or whatever. Those are the things that you owe, and you're paying monthly for it. And the whole point is to keep the liabilities on the lower end. We gotta make sure that the liabilities are lower than the assets. Assets should be higher than the liabilities. And then the equity is the net worth, right? So, and those should always be on a credit basis. So when you see them as a negative on the bottom, it's good, because it means that the partners are making money. It means that the investors, the stakeholders are making money. And right at the very bottom, you're going to see the net income, and it's the profit that the company has made over the year. So, and that's over the year so far. And that's why we like the balance sheet, because the balance sheet is like paramount to everything else.
Okay.
You know?
I was thinking that, wanted to ask it.
Yeah,
The most important view of the business is the balance sheet. That's
right.
just that's it. That's the Bible. There it
Sure.
is. And
Yep.
then next to that, underneath that comes what?
The P&L.
It okay.
Yeah,
All
for
right.
sure. So in the P&L, right, the P&L will show you what came in and what went out in a period of time, any period of time you want.
Hmm.
So, and some people, they have different financial years. Like if you're a school, it's not January to December, it's like September to June,
Hmm.
and then
Hmm.
they have this off period in the summer. You know what I mean? Um, so, and in other parts of the country, it's different. It's like August to, like, they start in August and they end in May,
Sure.
that kind of thing. So the P&L will show basically how much you earned in income for that period of time and how much you spent in that period of time. But it shows you three categories. It'll show you the income, it'll show you the cost of doing business, which is the cost of goods sold. And the cost of doing business is what is absolutely 1,000% necessary to run your business. Like, your business cannot survive without this. And then the expenses afterwards. So, for the sake of argument, let's say you have contractors, you have office supplies, you got, I don't know, you got auto leases, you have, gosh, you got like so many things. Stamps, you got to send
Hmm.
packages, things
Hmm.
like that. Even meals with your clients. Meals with your clients are important to keep track. Your mileage, your mileage, your gas,
Sure.
any work you do on your car. You got to keep a record of all of that,
And
and
and we
all of
talked
that.
about that previously.
Mhm.
at this point in time, it's a hard record. As a for where I'm going with that, a credit card statement isn't going to work with the IRS. They
Nope,
need the actual receipt.
that's
Yeah.
right.
Yeah. And
And
of course, there's apps and things you can take a picture of it and all that and print it out and just
yeah,
store it on your phone or on a cloud or whatever it is. Um, but I don't know if I told you this, but I have a friend, and when she gets in my car, she jokes because the dashboard, the air ducts is where I keep all my receipts. And she goes, "Is that your file cabinet? Is this like a mobile file cabinet?" Because everywhere I go, whether it's, go for dinner and it's with a client or whatever, you get gas, and I just stick them in the vents. And then after a while, it's like, all right, well, air's not going to come through. I'm gonna take those out and then put them somewhere, put them in an envelope. I should scan them with an app. I got to get there. And I'm a tech geek, so I should be doing it like stupid. But because it's like 14 steps, I got to remember to make sure I remove it and then put it in its proper place, i.e.,
Mhm.
a certain envelope that's labeled where I could just, done, finished. The piece of paper wouldn't even make it into my car. It's in the garbage already. Like if I had
The,
an app. Yeah. Um, for you working with somebody, you handle the bookkeeping side and then the other side of the bookkeeper. Like, for example, if somebody already has a bookkeeper, you would pick up from where they leave off. Do I have that right?
yeah, yeah. So there's advisory services, there's fractional CFO services, and like for example, what we're doing right now, going through the reports. So if I did an advisory service for your business, it's exactly what we're doing right now. You know, so we would
Okay.
go into detail about everything that your books is showing us, provided that the data is good. So I would have to review the data, and then after reviewing the data, I would have to go through the reports. And I wouldn't do this with you. I would do it line by line myself and then create the reports and make them pretty, put in a bunch of things. And then after that, I'd do the ratios, right? And I love the ratios myself. I love them because not only does it have like pretty pictures, but sometimes the business owner needs a visual and just needs something really clear cut because the report can be really thick. Sometimes the report's like 20, 30 pages, And so I walk them through it like how we were just doing right now. And then at the end of the day, I go through the financial ratios that just spell things out for them. So, for example, in this scenario that we were just describing, we did the financial ratios, and the financial ratios, they're mathematical comparisons for the financial statements that we just did, right? And they assess the company's performance, their financial health, and their like operational efficiency. So
Hmm.
the first one is the profit ratio. And the profit ratio, I don't have to go through all of them because I know we're running out of time, but like the profit ratio, first of all, it shows that for every dollar of income, the business keeps X amount of cents as the profit. So that's the profit ratio.
Hmm.
So in this scenario, um, for every dollar of income that this company earned, they kept 32.45 cents on the dollar. So that's a 32.45% profit margin, which is pretty gosh darn good, you know?
Wow.
Yeah.
This is
So,
like finance doesn't excite me. This is exciting me because
yeah.
it really gives you detail of how hard you're working and what you're keeping, down literally down to the penny. We are out of time. I can keep going. It's like this is so important, and I believe many business owners don't realize the importance of drilling down, going into detail. We're creatures of habit. We're just on
Yeah,
autopilot. Well, yeah, I can pay my bills, but could you pay them better? Could you have more money, and
yeah,
left over?
for sure.
Taking a look at this. What's your website, Kat?
www.equilibriumconsultantsnj.com. And my cell phone is 848-565-0113. And the email address is info@eqconsultantsnj.com. And we're launching a new website pretty soon. So it should be wrapped up by today. So we'll probably be launching it next week. So I'm so excited. It looks pretty.
Oh, very cool. Very cool.
Yeah.
Make sure you deduct for that.
Yeah. Oh, for sure.
And you're available virtually anywhere if somebody has questions, and you can help. That's the beauty of today's technology. You can do it anywhere for anybody.
Exactly.
Super cool.
Yeah.
Love the way you look at things. It's real. And yeah, you're a people person, but also a finance person. And that's really what makes you different. And always love talking
Thanks.
with you. Thanks for being here.
Yeah. Thanks for having me. This was
Yep.
fun.
We'll catch up soon. We'll be right back.
Broadcasting from the business capital of the world, this is the Podcast Business News Network.